Good morning. Thank you for joining us today on our e-invoicing webinar. Today's e-invoicing is going to be more on the implementation and the governance side and preparing for 2026. Last week, if any of you attended, I did the same type of webinar but with 𝗪𝗵𝘆. There we focus more on how business can prepare, how small businesses can be prepared for e-invoicing and what they need to do. Today, we're going to go a bit more deeper and we're going to go into the governance section of the governance aspects of e-invoicing. And we've got 𝗪𝗵𝘆 with us today. So 𝗪𝗵𝘆, if you remember, she was with us with our corporation tax webinar series. She's a chartered accountant. She's got lots of experience in tax, in accounting and audit. And she's a partner of 𝗪𝗁𝗧𝗵𝗶𝘀 𝗪𝗍, which is a tier 2 firm in globally. So and 𝗪𝗵𝘆, obviously, as you all know, is my go-to person for corporation tax. She seems to know inside out. 𝗪𝗵𝘆, do you want to give us a quick introduction about yourself for those who haven't heard from you or don't know you?
Thank you, Rehan. Good morning, everyone. I think you pretty much covered. I'm doing what I'm doing since 20 years, so all about taxes. With e-invoicing, again, super excited what corporate tax could not achieve, the seriousness in compliance, in governance, how things should be structured, what was not achieved in the compliance of CT. And I think now's the time that we'll see a lot of compliance requirements, and that's where I thrive. So I am happy.
Yeah, and 𝗪𝗁𝗧𝗵𝗶, do you want to just tell us more about 𝗪𝗁𝗧𝗵𝗶? Your global brand, and you also do e-invoicing in other countries as well, correct?
Yes. So 𝗪𝗁𝗧𝗵𝗶 basically is the 13th largest consulting firm in the world. We stand at the 13th position, and we are present in 90 countries. So basically, all the places where e-invoicing has been adopted. We have a very, very prominent counterpart in Saudi as well, which is 𝗪𝗆. So we have presence across, and then therefore we keep learning from Europe, from the parts, Malaysia, Singapore, wherever the e-invoicing arm has been taken care of, and other compliances, international taxation. So the strength lies in that there is actual company presence and consulting presence in 90 countries. We have cross-border understanding as well as client relationships. So that helps us providing services at a level which a multinational would need. So yeah, that's that.
Yeah, so that's really important for our viewers to learn and to understand, especially as 𝗪𝗁𝗧𝗵𝗆. This is you have 𝗪𝗁𝗧𝗵𝗆 has just recently been implemented, recently established in the UAE as well.
Yes, so UAE, they had a presence, but we are a full practice firm, so we have all the practices under this, and right now our presence is between Sharjah, Dubai, ADGM now, Abu Dhabi. So yeah, and 𝗪𝗁𝗧𝗵𝗆 is expanding, and we are expanding with them.
Great, very excited for you and for 𝗪𝗁𝗧𝗵𝗆. I'm Rehan. I'm an international tax expert, also a qualified accountant. I am the co-founder of Taxstar. We're a tax technology company. We launched our corporation tax product earlier this year, and we also be looking to launch our e-invoicing product by the end of the year, and also a Saudi zakat product as well. I also have an accounting firm that I own as well. We were the first 0 platinum partners in the GCC, and I also host the 𝗪𝗆𝗆 podcast. So if you're on YouTube, on LinkedIn, please subscribe and check out some of the episodes. We meet with entrepreneurs and we talk about the story. 𝗪𝗪𝗆, I don't think I've had you on my podcast yet. I think
not yet. You talk to me enough. I think you do not want me to talk to on podcast again.
No. We need to bring you and Salman to the podcast as well.
Inshallah.
To organize that. So with e-invoicing, we'll have a quick recap of the law where we're at the moment. There has been some significant updates that have been released, and I'll go through them. We'll then switch over to 𝗪𝗪𝗆, who will then talk more about the governance aspect of it, just so you get a different flavor of different things that you need to think about. We get to draw upon 𝗪𝗪𝗆's depth of experience working with large multinational companies, and what kind of things that prop up when you are implementing a tax technology project with an ERP system as well. So I'll start off with the very, very basics. So what is e-invoicing? E-invoicing is the process of generating and transmitting and receiving an invoice in a structured format. So it's not a PDF invoice. It's no longer a handheld written invoice. It is an e-invoice which has a piece of code, which is an XML code as part of it. And the way it works is you would transmit it out of your ERP system or your accounting system, and your customer would receive it. And what they would do is they would then be able to automatically record it in their books with very little manual intervention as well. Why do we have e-invoicing? The obvious reason is to strengthen tax compliance, and that's where the government gets to see have a copy of all of the invoices that are being transmitted through your system through e-invoicing. And I'll go a bit more detailed into the mechanism of that. But they get a copy so they can see that whatever you've issued, you've already declared to the government, which means that there's less manipulation of your invoices, of the invoice amounts, and you'll have to pay your tax liabilities as and when they're due. It also reduces fraud. So one of the things that this does is now you have a closed loop system for your invoice. So if you're used to receiving invoices on WhatsApp, on email, from third-party suppliers on paper, that no longer happens, because historically there's always been, fraud off the back of that. Some random person could hack your email, send an invoice to your accounting team. They then look at it, they see it's the same supplier, but the bank details have changed. They make a payment, and your money's gone. So that is eliminated because now you have to go through the e-invoice system. As I mentioned, it increases operational efficiency. Why is that? Because again, when you send your invoice or when you receive an invoice, it's all electronic. It's all going through the system. So no more invoicing, no more emailing an invoice, no more WhatsApping an invoice, less manual intervention and less manually keying in an invoice in your AP system. So that will save up a lot of time for the accountants. And we, as an economy, the UAE, we're aligning with global practices. We're part of the OECD. And we are also looking to implement e-invoicing along with many other countries as well. And what you'll find over the next 5 to 10 years is most countries are starting to implement e-invoicing as part of their roadmap with tax technology as well. Some of the key mandates that you might want to just be aware of: the effective date is the 1st of July 2026. The scope is for B2B and B2G transactions, not yet to B2C. So if you are a restaurant and you do not have you're not making any sales to B2B customers, and you fall under B2C transactions as well. And the choice of implementation is a decentralized, continuous control and exchange, and that's the 5-corner model. For those who have worked or do business in Saudi has implemented e-invoice as well. It's completely different set of rules or mechanisms in terms of the way Saudi has done it. The way Malaysia has implemented, the way Australia, New Zealand, Singapore, Europe, they have a similar framework as the UAE, which is the 𝗵𝗆 method. Now, some of the key updates from a compliance point of view that has been released by the government is from the 1st of July 2026 is when the pilot program starts. So there's 2 phases in this implementation. The first phase is if your revenue is more than 50 million dirhams, then you have to go live by the 1st of Jan, but you have to have registered with the ASP, an accredited service provider, by the 1st of July 2026. If your revenue is less than 50 million, then you go live on the 1st of July 2027, but you need to have registered with an ASP by the 31st of March 2027. So from pilot to implementation is a 12-month gap. It's different to Saudi because in Saudi you have different waves. So although there was a phase 1 and phase 2, phase 2 was rolled out in waves based on your revenue. With the UAE, you only have 2 waves. So you've got wave 1, which is the revenue if your revenue is more than 50 million, and wave 2 if your revenue is less than 50 million. So you have a very short amount of time to prepare your systems for e-invoicing. I won't go too much into the pilot program, but it will begin on the 1st of July 2026, and you can be invited or you can ask to be invited to join. And that basically means that you and your customers and your ecosystem will start implementing e-invoicing, so you can start testing those transactions from the very beginning. How the system works, as I mentioned, this is a 5-corner model. The way it works is you will have an ASP, an accredited service provider, and what they do is they are the gateway to the PEPL network. Once your ERP system sends an invoice to your ASP will push it into the PEPL network, and your buyer's ASP will then receive that e-invoice. They will validate it, and then they'll send it to your buyer, and it will go into their accounting system. Once your ASP has sent the invoice through the PEPL network, the FTA also gets a copy of the invoice, so they can see all of the transactions that are going in and out of the PEPL network. So they can see how much they can tie that back to your VAT returns, for example, to ensure that your VAT is accurate. Now, this happens in real time. So as soon as you send the invoice through to the ASP, the buyer's ASP will get it straight away. So there's no delays. In the Saudi model, for example, what happens is your invoice goes to 𝗪𝗪𝗀, which is the Saudi version of the FTA. They have to approve it. Once they approve it, it goes to your customer. Now, in this situation, there's no approval by the FTA. They just get a copy because the validations is done by your ASP. These are secure documents, and they're also standardized with a format called PINT. So what PINT is PINT is the format of your e-invoice. Two things you need to take into consideration. The first is there's 135 plus data fields that can be completed on a PINT, and there's 16 different types of invoices that you have to be familiar with. So as part of governance, I'm sure Rashmi will talk about some of the training that you need to do. This is a new step in terms of where you're processing and receiving invoices. And as you know, receiving an invoice is very critical for businesses because that's how you generate revenue. That's how you get cash as well. There's going to be mandatory invoice fields as well. So e-invoice and the VAT rules, obviously, they overlap. So e-invoice is facilitating your VAT transactions. So there are certain fields that you need to be aware of that you need to make sure that you're capturing in your ERP system to ensure you can then push that into your ASP that then pushes the invoice into PEPL as well. The standard VAT rules still apply. So, for example, you need to issue your invoice within 14 days of that transaction or that tax point. You need to include things like your TRNs. So many systems still probably don't store the TRNs of their customers. You need to, and your suppliers, you need to make sure you do that. It will be a good spring clean of your VAT processes. VAT has been around since 2018, but even now I come across many businesses who have certain mistakes or weaknesses in their processes, and this will strengthen their process to ensure that from an operational point of view, your VAT processes are aligned. Credit notes. So one of the things that e-invoice will not allow you to do is if you send an invoice, you can't cancel it straight away. You weren't supposed to do that anyway under VAT rules. But as soon as an invoice is sent, that's it. It's sent. If you wanted to change the invoice, you'd have to issue a credit note. But again, there are specific rules as per VAT as to when you can issue a credit note. So making sure all of the processes are as accurate as possible before you send the invoice is very important as well. In terms of compliance, like I said, the FTA will get a copy of your invoice that you've sent. So you need to make sure that your invoices are accurate. VAT calculations have to be accurate as well because the FTA will have their version of your VAT return and you'll have yours. So making sure whatever goes into PEPL is reconciled against your VAT return. Your VAT might be manual or it might be system generated, and you need to make sure there's an additional reconciliations part of that as well. And then preparing for 2026. So Rashmi, you've got a slide on this, so I'll let you talk about the preparation in your section. And then beyond compliance, the benefits, as I mentioned, you'll have better accounting records. You can handle cross-border trades as well, because the PEPL network is an international network, not just a UAE network as well. You don't use paper anymore, so less trees getting cut. And in theory, your payments should be faster. And why should it be faster? Because as we all know, when we chase invoices, one of the classic excuses of not paying on time is, oh, I didn't receive your invoice, or it's not in the correct format, or you didn't put the TRN number, right? That no longer applies. Once an invoice goes through the PEPL network, it's already verified to ensure all of the relevant fields are there. And once your customer receives it, you know straight away when they received it. So they can't come up with that excuse, oh, I haven't received the invoice. So in theory, payments should be faster as well. I'm going to stop there, and I'm going to hand it over to you, Rashmi. And I think we've been talking about in the previous webinars about e-invoice, giving an education of the e-invoice. And we've also been talking about some of the implementation aspects to it, but we haven't really spoken about governance. And I think that's quite an important topic, especially for larger businesses, especially for businesses who need to make sure that things are happening the correct way, given the tight deadlines, and there's minimal disruption to the business as well. So Rashmi, over to you.
Thank you, Rehan. That was crisp. I've heard enough, Yani. We have been listening to this, but then I like a few aspects that you added in there. And I just want to remind and add to your aspect, the collections can be on time, but then you might have to make the payments also on time. So you need to be ready for both sides. If you were on the sides of saying that I've not received your invoice, you cannot say that anymore. So that's one thing. And see, I want people to develop a thought process that now your compliance is reviewed transaction to transaction. It's not reviewed return to return. Your VAT compliance is not from one return filing to another return filing. It's from each transaction. Each transaction you take, it's with the FTA and it can be reviewed. So now it's transaction-based review. So super important that your compliance is your governance system. And when it's compliance, VAT compliance, your systems have to support it. It cannot be that, okay, somebody's reviewing. I like the idea. There are 16 types of invoices. Now we need to sit back and see in our own types of companies, which types of invoices are applicable, and does my system really support a real-time generation and acceptance of all these kinds of transactions? So what has happened is that a classic mistake which happened in corporate tax compliances, I think by many entities, we waited till the end moment, thinking that this is just a return filing, a payment of 9% tax. It's a classical point where we stand again and we might think only that which technology do I want to implement? Is it only about taking an e-invoicing service provider and then bam, we are compliant? Or we need to see, do we have the correct compliance and governance base in our company to be able to go and implement the service provider correctly? So basically what I am going to highlight is you need to check your compliance, you need to check your VAT, you need to check your governance, and then go to the implementation provider or go to your technology supporter. So by the time you have an ASP ready, selected, and start working with them, you have to do a housekeeping exercise. And that's what I'm going to highlight here. Next slide, please. I think you've covered the timeline, so I'll not spend any time here. These are the three pillars I'm going to talk. I think I can only cover this one slide and we should be fine, which is you need to take care of your compliance, your VAT, and your governance. I'll go to simple examples rather than using the jargon. If I have to receive an invoice, I should know that at what point I want to receive, what are my payment terms, my GRNs, my approval systems, that if today a system can send an invoice and it can sit in my books, but who is checking them? What are my reconciliation processes? When does my supplier send me an invoice? Have I understood their terms? Have I connected it to my GRN and the other processes in my company? That is going to become super critical, more critical for me than issuing invoices. So basically, it's about your procurement process and your sale processes being aligned to your finance function and to your compliance function. Now, companies can be divided into many categories. Service industries, which might not have a very complicated tech-based accounting system in place, and where the uh, invoicing and the bill booking can be very manual and does not require a lot of complicated. So it's a tier two where the phase two will come into play. But phase one, 50 million plus turnover based companies, I am thinking that a time for a health check, a time for a governance check, that can an invoice be issued in real time to FTA by the time every invoice is raised. All 50 fields? Yeah, Yani, when you say there are 50 fields in invoices, you have to look at what 50 fields are there. Does your system actually capture, your governance system actually capture the information of all those 50 fields to be right on the invoice? Certain things are system generated, the invoice numbers are system generated, blah, blah, blah. But then the type of transaction, the type of headings, the type of details that it requires to support the type of transaction, does your governance system actually support that? Um, I'm also very interested right now in the VAT compliance. We all did an exercise of going and filing the returns right in 2018, 2019. Perhaps we also read, but a lot has changed from then till now. A lot of clarifications have come in, small nuances. Sometimes they apply to you, sometimes they don't. But then a real exercise of going from when we first implemented that till now, what changes have come, and have I done a patch exercise of fixing the systems patch wise whenever something came in, or did I make it the part of my process of issuing a correct invoice or issuing this a simplified invoice? There are nuances which have changed about the simplified invoice now. We all understand the concept, but then B2B simplified invoice, what needs to be added, has just come in as a clarification. Now, did my systems get updated? Did my approval system get updated to get the correct VAT compliance? When we talk in jargons, when we talk as an overall picture, it seems like too complicated. But my suggestion to all the firms would be, take each process line, see how your governance systems are following, who is approving what, who is talking to when, what is the timeline for that. Because now the invoice issuing timeline, 14 days within the requirement of providing service. Are your terms and conditions aligned to that? What would be your progressive billing processes? What would be your merged billing processes, summary billing processes? Those should be looked into. So a very good time to take a step back before you get a ASP. So it's a parallel exercise. You need to talk to ASP, you need to see to your technology, but then a garbage in, garbage out, right? You need to see what's you're feeding to your technology. So an exercise to start doing your governance check, your policy procedure check, especially on the transactions which will hit your finance function or your invoicing and procurement functions, and your VAT health check. I would suggest a recheck on the nuances of VAT compliance from when you did it first in 2018, 19, 20, whenever, till now, the changes and your process updates. And I would also like to highlight that those who are going to get into an overhaul, which think that my processes are not in place and I want to do a detailed study, take a little wider look. It's not about just right now ticking the box for VAT. Tomorrow you will have withholding taxes coming in. So what's very important is, how is your master data being captured for all compliances? This is the time to build your master data correct, such that tomorrow any additional line, so there are many items which are excluded for now, but we don't know till when will that be excluded. So if that gets included, are you ready to just plug in that, or again your master data has to be changed? So very important point is having the master data correct, so that tomorrow withholding taxes come in, this gets wider, any change in VAT comes, your system can talk to your master data. So yeah, the next slide. So these are the compliance details. I've just gone in detail for each aspect that I discussed just now. Now, because the ASP structure gets mandatory in 2027 for almost everyone, you need to see that you are capable of your existing requirements being processed, your tax invoices, your mandatory fields, and one requirement that FTA should be able to audit. The data should be available in the format they want. So that also has to be aligned with this. So I think creating a correct infrastructure is now not an optional thing, it's a mandatory thing. You cannot have an option of creating correct infrastructure. That will land you into multiple non-compliances. If you still sit back and think you can have certain processes manually done, manually checked, reporting, etc. Next slide. I think correct VAT in itself is a topic that can be discussed over series of discussions. So we all understand correct VAT, but then to go into details, the devil lies in the details. The types of invoices, if you go look into the instructions for the invoices, the number of fields, the number of types of invoices, the credit note issuing timelines, you would realize that these are all somehow related to VAT compliance. So you need to see that whether your reverse charge on services, whether your segregation of database, your recording of data of your customer and your supplier is in as much detail as the e-invoicing requires it, which comes from VAT compliance. So a lot of it, because the VAT law is part of e-invoicing compliance, so your VAT regulation, VAT compliance is a start point to have your e-invoicing compliance correct. And the next slide, the governance part. So I think I talked about it at the first slide itself, but then go back and look at your master data. Who is talking to what derives from rules, and there is a master data of all the rules and regulations that you want to follow. The exceptions should be minimal. You're going to get into a point where you have to comply real time. So the exception, manual approvals, they should be a very minimal part of your transactions, and the rest should come from data flows, which are compliant data flows and compliant process flows, the policies, procedures in and around each function is super important to look at, especially the finance, IT, compliance functions. Clear ownership, accountability, who is doing what, who is approving what. And I think I cannot emphasize enough the requirement of having your master data correct. The requirement of when and master data should be updated. Your onboardings, your master data regarding the fields, because if you don't have a field updated, the whole system crashes when it tries to generate an invoice and the invoice does not get approved. So whole system crashes if one field is not keyed in correct, if the parameters do not match, if anything that you have fed in is not according to what FTA requires it in the e-invoicing. So your system should be capturing exactly what the portal would accept, right? So that to function correctly, you cannot keep going back to your master. There has to be a checkpoint where no wrong recording in the master data happens. And this will tomorrow help you in a lot of other things, because when withholding taxes come in, your reporting is not annually. You will report on the withholding as we see in other jurisdictions, either quarterly or monthly. So it's not just about your VAT compliance, that will also derive the other compliances. So while you have time from to now till this going live, working on your master data and your governance is a very wise thing any company will do from now. I think the rest you have covered. If we go to the next slide, this is again the timeline. I don't want to go through it. This is again the summary of what I said. Multiple VAT rates and treatments, full and simplified invoices correctly, sequentially numbering each type. If you follow each type should have that control. Storage is something that needs to be highlighted because the requirement of the storage would be within the country, the data storage. So they need to see that the data storage is correctly as per the requirement. And audit trails, which is something we do not pay a lot of attention to, and therefore the mistakes like not issuing credit notes but revising your invoices, which is not a correct policy any which ways, accounting wise, VAT compliance wise. But now e-invoicing puts a lot of controls against it. What you need advanced capabilities now is you will receive buyer generated invoices. You will have your supplier invoices coming to you directly. So a control in place, like how are you currently receiving, who reviews, like you said, a WhatsApp, a email, something to this. Now the invoices come and sit in your system. Once they are in your system, who is reviewing it, who is seeing that it is according to the terms that you are required, your supplier to raise you the invoices. You cannot go back and say change this and change that. So it has to be pre-vetted before it comes to you. That's it. I think I am up my time. The next slide is just a readiness check, which I think I have. One thing that I missed out, I think, in all the discussion is the training of your whole staff, the training of all the ecosystem that would be dealing with the e-invoicing, and the compliance in and around it becomes a part of your governance as well. But it is super important that everybody understand what changes in their role, what changes in the way they perform their function, so that the governance applies correct, so that everything else that supports your compliance function of being invoice wise, tax compliant, and reporting capable. So that's that. Take a step back, do an internal review, and then parallelly talk to your ASPs as well.
Cool. No, thank you for sharing your insights on that. I wanted to talk about a few other things as well, just to kind of
yes, please,
a bit more into governance and to draw on your experience. So one of the things I wanted to talk about is the annual audit process. So 𝗪𝗶𝘀 𝗂𝗁, you guys are registered auditors, and you can audit all different types of companies and free zones. In your approach to the audits now that you have an e-invoice, now that you'll be auditing companies that are going through the e-invoicing regime, how does your approach to audit change, and how do your clients need to be prepared for the audit going forward?
It would be a reverse function, I think. Audit wise, we used to do a lot of review. This helps us because when we go for an audit, we are supposed to rely on the internal controls. If the internal controls are not in place, then we have to do a lot of detailed exercise to be sure of what data is there is reliable, right? So now how it helps us, it rather helps us that there is a process in place, and now we need to review the processes rather than the sample testing. So if it's either we review the process in place, whether there is a policy and procedure and a policy control in place, and we check the controls actual exercise in the function in the company, or if there is no control in place, no policy procedure in place, then we go into sample testing. We take a lot of samples to make our own way of understanding of how the controls are applied in a company, right? So now how it helps us is that we shift our audit approach from sampling based to control based review, the policy procedures in place. However, I would say, to add to your point, this might be a good time. Many companies do their internal audits once in a while, and this might be a good time to get your internal audit done if you're not doing it periodically, so once in 2-3 years. This might be a good time because internal audit findings become a good base for external auditors to use, and your internal audit findings will become a very good place for your governance and your vet health check and compliance.
Does that mean that you no longer need to get confirmations of your accounts receivable? now that it's gone for e-invoicing, or do you still need that as an auditor? I mean, I'm just speculatively asking.
We might not need, so there are two types of confirmations we get. We get a balance confirmation, which might still be required, but the transaction level confirmation might become a little obsolete to ask for if the whole ecosystem is in. So still you have certain people who might not be complying, right? Who might not be required to comply. So if you are in any case dealing with them, then it might be still a question. But then most of them, otherwise, the transaction review will become easier. This might not require a confirmation, but the balance still stays. But what will happen is the compliances and the audits can be done faster. The exercise of reconciling the ledgers as far as the transactions are concerned should go out. Now it's only the payment and the other transactions, adjustment transactions, that you need to review to reconcile your accounts. So even the closing of the books should happen faster, I guess.
Yeah, no, good point. And then one more aspect of governance is, some companies have this, some companies don't, but a policy of their invoicing process, everything from issuing a PO to getting paid, right? So some companies have them, some companies don't. You as an auditor, you always want a company to have the policy so you can test it. And this policy should obviously be approved by the board or senior management. Now, from your point of view, if you're auditing a company in 2027 and now they have already, they've implemented the invoice, what kind of work will they need to do from a invoicing policy point of view? And would you want that to also be approved by the board as well?
So any policies, again, it can draw from whether they have a board structure, who needs to approve is a later question. What we always try to tell the companies, and this has been our discussion perhaps once in corporate tax compliance as well, even if you're a small company, even if the steps followed are only 4, the policies do not need to be an overcomplicated document created by a third party and you to adopt, etc., which kills the purpose. I think for smaller companies, the good start point could be to write down as is what they follow. That exercise itself gives you a lot of sense check when you write it down, when you document, even if you're following 4 steps to document that. And I think if you are in 2027, we see ourselves in 2027 and you've gone to e-invoicing, you will have to go through this exercise to be compliant. Whether you do it very methodologically or you do it very haphazardly, but then you will have to do this exercise. We as auditors would always like to rely on a management approved policy, or at some stage some management level gets involved in the approval level, right? So there would be a hierarchy defined of what the management has agreed that who can approve what. So ultimately it has to be governed by the management approval. So this helps us do our task better. The audits can be really value added practice to do. If those systems are in place and we are not doing vouching, there can be a lot of other value adds that can be given on this basis. So 2027 audit approaches will be very different, inshallah. But it's the exercise from now till 2027 which I want people to take seriously, because audits are like in a way or others becoming more and more requirement in this place, which was earlier a lot of optional exercises. More and more compliance is coming in, and a good audit exercise can become basis. What your audit report says and discloses can become the basis of your compliance check for your corporate tax reporting, for your VAT reviews, etc. So yeah.
I noticed with corporation tax, auditors are now, before they sign off their accounts, they want someone to sign off the corporation tax calculation now. So I've seen that happen as well in the market, and I guess for most of our viewers who are watching this webinar, they're going to be accountants, right? They're going to be our people, accountants.
It's our people.
You need to be able to be not just implement your e-invoicing solution and have the documentation, but also be ready for audit, right? Because I think in the UAE, audits are going to getting more and more sophisticated, and rightly so, right? We want to be in an economy where, you know, it's well respected. You know, you've got companies that are, you know, strong companies that are growing and helping with the economy as well. And so I think keeping an eye on the governance aspect, the audit aspect, is also very important when you're implementing your e-invoicing system, because there could be some things that don't go through your e-invoicing system, such as B2C transactions, and how do you then, you know, tie that back to your audited accounts? I'm just going to go quickly run through some of the questions. We've got quite a few questions on the chat. First person asked, can we get materials? Yes, you can. Just give us the DM and we can share the materials with you. This question might be something that you're interested in. So as a gentleman called Umair, he's asked, how can we analyze, if any, of e-invoicing on corporation tax?
Sorry, again, you broke for me.
How can we analyze e-invoicing on corporation tax? I think that's quite an open-ended question, right?
Yeah, I'm trying to understand from which aspect is the question coming from. How is the e-invoicing going to impact corporation tax is the question, or the compliance of corporate tax?
Can we analyze any impact?
E-invoicing's and impact on corporation tax, other than the numbers becoming more transparent, and if you are a MNC, there is an aspect in the e-invoicing law where the data sharing has been clarified, that the governments between the countries will have the access to data now, and they are going to share it as and when required for compliances. So your alignment of periods, your inter-country tax calculations, claims, alignment, this is what I am looking at as far as e-invoicing's impact through an actual compliance system. E-invoicing basically is making your numbers more transparent to the government and to other players, right? So that's the only impact I can see right now. If I'm not sure if there is any other aspect they're asking about. Other than that, what I mentioned earlier, with more compliances coming in, with corporate tax, withholding taxes coming in, each invoice and the type of invoice will be connected to the rate of withholding tax that will come in. And I think that then connects to the automation system in the payment terms, because the withholding tax will play a role then. Right now, the rate is 0, so it might not apply.
So, no, thank you for that. Another question, you mentioned that initially the pilot is starting from July 2026, and phase 1 will start from January 2027. For whose people those revenue exceeds 50 million, it means it's not mandatory to implement from July 26 onwards. Yes, so you don't implement e-invoicing from July 26, right? You can join the pilot scheme if you want to, and maybe your customers and suppliers have joined the pilot scheme and you want to be ready. But it will be mandatory for you to implement e-invoicing from the 1st of Jan 2027. Now, obviously, us accountants, January is like the worst time ever, because you're closing the books, you're doing the audit, you know, you're doing your VAT. So you probably don't want to implement it then. You probably want to implement it before if you can. But then, you know, you're going to be hit with 4 different things in 1 month. And so you need to make sure you have a very good winter break before you come for January 2027.
I want to add something there, Rehan. 2 things. One is that what is the requirement in 27 is that you will have to finalize your ASP. So within 27, you have to finalize your ASP and then would start an exercise. And because it's an exercise that, like any other good implementation of new system, you want to do an exercise of running it for some time to know how compliant you are before you get to 1st January, when it is a compulsory thing. On 1st January, if anything goes wrong and you're not complying, then there are penalties in play. But then when you're doing it, so there is a phase when you can learn and participate in it. The law keeps clarifying that if you pre-adopt it, you still need to comply with the whole of it. So you cannot partially play to confuse the system, because you're talking to different systems once you start complying. So it's important that you decide when you want to start complying. And if it is 1st January, it will be a risky call to make, because on 1st January, bam, you go online and you need to be 100% compliant. But the date is as such 27 January if you're not in the pilot phase.
Yeah, no, thanks for sharing that. Another question. This is currently applicable only for B2B and B2G transactions. This means no applicability for B2C right now. Please clarify. In principle, if you're a pure B2C business, in principle, you don't need to worry about e-invoicing. However, B2C businesses sometimes have B2B transactions that they are buying. So for example, a restaurant may sell pure, goods and services to their customers from the restaurant, but the suppliers may be ASP, may be e-invoicing mandated, and your suppliers may say, okay, you need to make sure you have an e-invoicing system that can read it, that can capture our invoices and put it into your system. So although in reality there is no need for a B2C business to prepare for e-invoicing now, because you're part of the ecosystem, you may be mandated to do that through your suppliers. So just keep that into mind.
Also, be careful when they are saying, so when you say B2C and B2G, the law right now does not. So if we read it very carefully, I think the 50 million threshold does not exclude B2C as such. The transactions B2C are not to comply. So if you are a business who say does B2C as well as B2B, the threshold calculation, and even if you do, as you say, any restaurant supplying for an event might be 5 transactions in a year, but then if you're crossing 50 million, and if later you're not crossing 50 million, but you are doing B2B, you still need to comply for those transactions. So that is, whether you are a pure 100% B2C is something that needs to be seen also. The threshold is not segregated between B2C and B2B yet. It's not clarified.
Yeah. Another question, could you please provide a list of entities that are not required to comply with e-invoicing apart from the existing exemption for B2Cs? It's not really, the law hasn't segregated it by entities, it's by entity type. So whether you're B2B, B2C or B2G is what you need to be aware of. But I think if you're not sure, then get in touch with us and we can look into your personal circumstance and see where you're trying to get with that. The last question is a bit more technical. Suppose if the invoice is issued backdated, say invoice for services is done in October, issued in November, as the invoice date is 31st of October 2025, how will it affect in the ASP, 𝗵𝗆 FTA? So remember, e-invoice is enforcing VAT rules, right? So if your tax point is 31st of October, then you would issue your invoice then. If your tax point is in November, then you'd issue it there. All the e-invoice rules are doing is not letting you manipulate with the invoice dates. So as soon as your tax point has occurred, or you have a broad range of your tax point, you then choose a tax point, raise an invoice, and then push it through 𝗵𝗆. You can't. Now with services, obviously, there's a number of rules on when that tax point is. And you'd obviously need to speak to your specialist VAT advisor to figure out when that is. But from an e-invoice point of view, this is why I mentioned in the beginning, there's overlaps between VAT and e-invoice. When we first implemented VAT, there was a lot of confusion in the market, and there was still some leeway in terms of what the tax point was. And that was slowly tightened up with clarifications that the government gave on the tax point for VAT. Now, with the invoice, once you select it, that's it. It's set in stone, and you submit your invoice, and a copy of that invoice goes to the FTA as well. Rashmi, you want to add anything to that?
So first of all, I need to clarify that the concept of backdating has to go off. The term backdating cannot be used anymore. So, which should have been the place, but then we know practically how the market was operating. So that's not there. And Now you need to tie, that's what the governance check and the VAT health check that we're talking about, that you need to tie your contractual terms to VAT compliance, because VAT asks you to generate invoice within 14 days of providing a service. So are your contractual terms versus your invoice raising system in alignment with the VAT laws applicable, is what you need to check. And then the invoices have to be so invoice is finally just disclosing to FTA what you're doing, and that has to be in compliance with your VAT regulation. So if the VAT regulation says that you have to raise the invoice in 14 days, you need to, unless of course the exemptions of the progressive billing and other things, which again are available in the VAT law.
You know, thanks for that. Another question from Shwaria. Could you please clarify, do we need to record entries manually in our accounting software, or will the supplier invoices automatically get captured in the buyer system once the supplier raises them in their books? How will this work for different cases like standard rated suppliers, exports, imports, out of scope transactions? Just wanted to confirm if suppliers need to raise manual invoices at the end, or if everything will be handled automatically through integrated through system integration. So, good question. In principle, everything should be, once you raise the invoice, your ASP reads it, pushes it through the PEPL network, your customer's ASP receives it, and pushes it into your accounting system without you having to enter anything in there. Because remember, the invoice has, you got 150 odd fields that you have on the PINT file, and you also have 16 different ways of invoicing. So in theory, what happens is your ASP should be able to read that invoice and record it even up to the VAT level, even at the account code level, if you predetermine what the account codes are for your e-invoicing. So that shouldn't really be needed to be done. You would save a lot of time in that. Obviously, some ASPs will integrate with your accounting system, some won't. So for example, us at Taxstar, we're looking to integrate with your accounting system. We don't just want to have a system where your invoice is then comes to our system and then you just download it as an Excel file or PDF. Our vision is to integrate it with your accounting system so it goes in automatically. That's what we're looking to do, and I believe most ASPs will do that, but there may be some ASPs that don't, because they won't integrate with every single system. Now, when it comes to exports, imports, and out of scope transactions, remember that there are 16 different ways that you can invoice via the UAE PINT, which means that all of these different cases should be covered by the PINT PINT AE file. If it's not, then when you're going through your implementation of your ASP, you need to go through all of the different types of invoices that you're doing. And also, you'd need to be in a position where you probably need to, as part of this exercise, speak to your customers and suppliers and make sure that what they are sending or what you're sending to them falls in line with these 16 different ways of invoicing. So in those 16 different ways, there are things like self-billing, there are things like exports, there are things like reverse charge as well. So in theory, all of that should be in there, but everything's going to be dependent on the way you implement your system and how you integrate your process with your ASP and accounting system, and how your supplier and your customer is working through their processes as well, because this is all part of a network. As soon as you send an invoice out, you receive an invoice. You want to make sure that it's treated as correctly as possible as well. Rashmi, anything you want to add on that?
No, I think you pretty much covered, because just the segregation initially could be another way of looking at it, is that because it's a phased manner, even if you 100% comply with your accounting system coding, merging or syncing with the e-invoicing, there might be certain suppliers and certain customers which are still not part of the network. So you will have to see that if you are getting invoices from somebody who's not part of the network, or you are issuing invoices to somebody who's not part of the network, then that automatic recording, you issuing still should be part of the compliance. But then if you're receiving invoices, that might still be a manual function. And I think to a large extent, because you're receiving invoice, whatever you're receiving through the portal system, because the fields have been aligned, if you align your system, it can be automatically recorded as far as possible. Those who are not yet in the system, that will still remain manual.
Cool. No, thank you for that. I think we're running out of time now. So if you have any further questions, feel free to reach out to myself or Rashmi. Rashmi, you guys are going to go into the e-invoicing consulting side as well, right?
Yes.
Yeah.
Yes.
So if you need any support from that point of view, you can reach out to Rashmi.
So between me and Rehan, I think if from now till whatever you need to comply with the e-invoicing, you can connect with one of us. Either the Techstar supports you once the ASP requirement is coming up, and we support you, or Techstar and 𝗪𝗵𝘆. So between us, you can get all the solutions you might require. So yeah, anything you need to know further, you can contact one of us. Sorry, Rehan, you were saying something.
No, thanks. And if you want to contact me, you can contact me directly on LinkedIn. Just send me a DM. Best way for our viewers to contact you, Rashmi?
Same, LinkedIn. I think they can reach out on a DM, and then I'll get back to them. Great,
cool. Thank you very much for your for joining me again. It's been a pleasure, and I hope everyone enjoys the rest of the day. Thank you very much. This webinar is recorded, so it will be available on LinkedIn Live, and we'll also put it on the Techstar YouTube page as well. So thank you very much, everyone. Take care.
Thank you, everyone. Take care.